Hello and welcome to the stock specific class here for Thursday, July the 1st. For all you Canadians out there, happy Canada Day. We're dealing with a tired market, and it's showing up on the breadth. The indexes are moving higher, and if you just look at the chart of the SPY in particular and the QQQ, it looks like you have a nice strong uptrend, but the problem is, and we'll see it here in just a second, is that the breadth is not there, meaning that there's not as many stocks that are participating. And, I look at a lot of individual stocks throughout the day just because I'd like to look at charts. I'd like to get a feel of what's going on. Sometimes the indexes can be a little misleading because the indexes, remember, are a collection of stocks. But there are times when just a couple of stocks could be moving and everything else could, be kind of flat or down. And it can give the illusion that the whole index looks good. For instance, Boeing tends to be a big driver of the Dow, Goldman Sachs. And if you have a situation where those top stocks, and remember the Dow is a price driven index, so that the higher price the stock, the greater weight it has in the index. So you could have a situation where those higher price stocks have an up day, a really good up day. Maybe they had a great earnings report or something, have a big up day. And because they have a greater influence on the index, it'll show that the Dow is up, 300 points or something like that. But if you were to go and look at all the individual stocks within the Dow, you might find that more than half of them are down, a bunch of them are flat. That you might not see the help of the entire index. It'll create that illusion that things are fine, when in reality, it's only a couple stocks that are driving that index move. And I think we're starting to see that a little bit. Now, what does that mean? Well, it could mean in the near term we could get a little bit of a pullback, but these things can change. I mean, news events can come out. Usually when you get in these situations, it's because traders are kind of pausing or waiting for something, or waiting for a reason to buy. I keep talking about that. A lot of times sell-offs create buying excitement. It could be that a lot of people are looking at prices out there and things. A lot of stocks look a little bit rich, and they're waiting for those prices to come down a little bit. But like I said, sometimes you can get a news event that just causes the trading crowd to get bullish, and the markets kind of take off a little bit. But you always have to be a little bit concerned, though, when you see this lack of participation, because it can often signal that the rally isn't maybe as strong as it appears. Let me kind of show you a couple things here we can see on the direction alerts here. Like I said, one indicator, I keep talking about this because we've been in this for a while. Indicator of a tired market is when you have sentiment high, followed by momentum, and then you have breadth that's all the way down here. It can indicate that the sentiment or the feeling that the market could go higher is very strong, but we're not seeing the participation by a large number of stocks. And that can, again, that's kind of a little bit of a warning sign when we see that. We also see it on the individual tabs. We talked about this on Tuesday, where we were hitting extreme on momentum and on sentiment down here, but we are really lagging on breadth. And so that's something that we're going to keep watching here. Do we see breadth start to catch up and move into that extreme range, or what could happen is in the near term you get a little bit of a pullback, where some of these indicators here, particularly momentum and sentiment, will pull back. Maybe they pull back into the buy range a little bit. What we're really looking for as far as a larger correction is to get all three of these into that extreme range and closer to the right side of that extreme range. And we're just not there yet. So I don't see any sort of major correction on the horizon just yet. The buy-sell ratios, you're seeing them just real compact here. They're just kind of back and forth. This is an indication of indecision as you're not seeing a clear direction as far as the buys. The buys start taking off right here, and the sales start dropping, and then they reverse. And now the sales are up, the new buys are down, and so we're just kind of whipsawing a little bit there. The sentiment indicator is getting real close to an extreme, but like I said, maybe we get a little bit of a pullback that causes that to drop a little bit, or like I said, everything could just start taking off right here, and that breadth could increase suddenly, and we could get pushed to that extreme pretty quick. In that case, we'd have to be worried about a bigger pullback starting or about to take place. If we take a look at the individual stocks or charts, you can see kind of what I'm talking about. So, you can see here that, the SPY looks like it's been moving up pretty nicely right here. Again, the problem is that fewer stocks are causing that drive or participating in that. And we are in that extreme range there. There still could be some room to run. The reason why I think there still could be some room to run is that the Dow hasn't broken out yet, or the Russell. We take a look at those here real quick. Here's the Dow right here. And the Dow actually, had a nice strong day yesterday. It looks like it's starting to catch up a little bit. And when I talked about this, how we could start to see the Dow up on days where maybe the NASDAQ is flat or down, where it kind of will catch up to the others where it'll start to break out. The NASDAQ's already broken out, but as you can see here, the last couple of days, trading days, it's been a little bit weaker. It's down a little bit today. Russell 2000, real close to breaking out. This will probably be the next one that breaks out. But again, just you're getting these real compact trading sessions, and volume's been a little bit on the light side. Now we are in a holiday. Well, these next 2 weeks are basically holiday weeks, because there are going to be people that because the 4th of July holiday is on Monday. There's going to be people that will take off Friday and create a 4-day weekend. So we could see lighter volumes tomorrow, and then obviously early next week, we'll probably see some lighter trading volumes. And that's something to point out. Make sure to announce too that make sure you realize that the market is closed on Monday. Enjoy your day off, your 4th of July on Sunday, and then your day off on Monday. But that could be a little bit of what's driving that breadth, that light breadth as well, is just the fact that we're in a little bit of a holiday period here. So we'll see if that starts to change next week. Let's take a look at some individual stocks. And one thing I did, sometimes I have a tendency, we all do, we have a tendency to kind of get into a routine. And what I like about doing these classes is that, I don't want them to be just the same routine every week to where it gets kind of boring. We're kind of looking at the same things all the time. And so that forces me to kind of change things up a little bit. And it's good, because sometimes you can find some opportunities somewhere that you weren't initially looking. And one thing that I like to do, especially in this type of situation where when the market looks like it's starting to get tired, and where the breadth it just doesn't seem to be there, there aren't not as many stocks participating in the move. What can happen is you can get a situation where the indexes here, or these different sectors here, sometimes you get a situation where they're at the top of the list here, 1 to 5 or 1 to 3 or whatever, but the stocks are a little stretched. There's not good entry points, into some of those. And that's what I've been finding lately is that as I've gone into some of these, that they look like they're in uptrends, and the trend is there. It's clearly up, but it's looking more like it could be in the later stages of those trends, and I don't want to chase them. And that could be a part of the reason why, they're not, some of those stocks aren't driving, they're not all participating. And one thing that you can notice if this is taking place is that you notice it by the strength rank sometimes, where if you go into computer and technology, there's not as many stocks in that 98 strength rank or higher. There's only a couple right here, and then it drops off. And then when you look at the individual stocks, they may not look as good. The charts may not look as good. And so one thing I'll try to do then is go down the list a little bit to see if there are sectors that are on the upswing that have maybe been down. They could be starting to make their way up the rake. They might be down here, and they might be starting to move up. And some of these will have higher strength ranks, and there'll be stocks that are coming out of those bottoms, and they're early in those new uptrends. Now, again, not every stock or index or sector that has been beaten up is going to come back again. But there tends to be a rotation most of the time of that there's a trading technique that some investment advisors have used over the years. You might have heard of it, where it's called the dogs of the Dow, meaning that there's some and again, I'm a trend trader, so I don't try to anticipate that a trend is going to develop. I want to wait until I see proof that one is developing. But the theory is basically you take all the stocks that underperformed in the Dow that for the year, so all those stocks at the bottom of the Dow at the end of the year, and you buy those for the next year. The idea being that the leadership, or the ones that led the way, or the highest the previous year, aren't going to be that way the next year, and that the ones that have been beaten up are going to rise back up to the top. Now, again, to just do that flat out, and buy those without looking at the charts or having any sort of proof that the trend is changing, I think is dangerous. But the kind of the philosophy is the same here, where we're seeing if, for instance, like the medical sector right here, it's been beaten up, come down. Let's see if we can find some stocks in here that might be on the move higher. And we might not have noticed them before because we've been focused at the top of the list up here. So that's kind of the idea here. I don't do this all the time, but like I said, if I start to, because my philosophy is, if I find great patterns up here, why go down the list? These are the sectors that are outperforming. If there's strong trends that are in place, you keep riding those trends. But if I'm not finding as many charts I like in these upper sectors, then I start to move down and see if I can find them down near the bottom. So let's take a look at the medical sector here. I'm going to start here. And one thing that kind of jumps out is you have quite a bit of stocks that are in the 90 range right here, as far as the strength rank is concerned. And so that's a good sign that you might be coming off of a bottom on some of these. So one I liked right here is STIM, 98 strength rank. I'm not going to try to pronounce the names of some of these. Let's switch this over to signals here. And you can see that this has kind of created that, you got that bowl. You have this big run up right here. You have this kind of bowl-shaped move. It's acting like an uptrend. It's been acting like an uptrend for a little while here, but the whole group hasn't necessarily moved up. The whole sector hasn't moved up the list there. So I like the fact it's pulled back here. What I want to make sure of, though, is that this ends up being a higher low. That was a pretty big sell-off right here. This might, you get a big drop like that, and then it moves a little bit sideways right here. It might have another move down. What I don't want is to go to a lower low, so take out that low right there. But it could have a little bit more selling and still hold that uptrend. We're waiting for it to go back to a buy signal anyway. So that one looks pretty good. If it can go back to a buy signal. Another one is right below it, MRNS, 97 strength rank. Had a nice big update today. You switch it over to candles, you can see it opened lower. That's a bullish engulfing candlestick formation. You're dropping, and then it completely engulfed the day before. At least that's what it's showing right now. Let's see if it closes that way. If it fades all the way into the close, that could look different, but it's looking like a bullish engulfing pattern so far, which is a good short-term indicator. But the overall trend on this one, it looks like it could be close to breaking out. It came back up. It had this big drop, came back up. Now it could be a cup with handle formation, meaning we could move sideways for a little bit here. So what alternative, if you could just wait for the buy signal, or maybe a stronger entry technique would be to wait for the breakout, wait for it to break out to a new high. As you hear me talk about a number of times, the rule of thumb is when you have these bull-shaped moves, if they can break out of it, that there's a tendency for the stock to move up from that point, the same distance as the top of the bull to the bottom of the bull. So you take that distance and project it upward. Again, it doesn't mean it has to. It doesn't mean it'll do it immediately, but that's generally what you would expect as a chart technician. That stocks have a tendency to move up in that, and that would be a big move, obviously. But obviously that confirmation comes from breaking out. So that might be something you kind of look for on this one. Another one on the list, GTBP right here, GT Biopharma, 96 strength rank. And again, this one depends on if that indeed holds as a higher low right there. You've had the higher high right here. Looks like an ABC correction or pullback right here. But that's probably about as deep a retracement as you want to see of that move up. You're probably pretty close to that 618 retracement level. Had a nice strong upward move here back on Monday. I guess it would be Monday. And then it's pulled back, shorter, compact moves. Let's see if they pull back on lighter volume. Yeah, so it pulled back on lighter volume, had this big volume spike, and then pull back on lighter volume. This thing should move up. That should be a higher low right there. And again, as confirmation, you could wait for this to go back to a buy signal. That's a pretty nice looking trend right there. Good strength rank. And then lastly, APEN, Apollo Endosurgery, 95 strength rank. But again, it looks like it's had this nice strong upward trend, and then it's kind of pulled back. Again, notice how this is a little bit more choppy, more sideways right here. This is more that directional move up. So now again, sometimes stocks will look like this, and then they'll suddenly just drop real big. Doesn't mean that this has to be a corrective move for another move higher. That's part of the reason why we wait for it to go back to a buy signal and kind of establish that higher low. This is a nice looking trend. And then I also looked at, I didn't just completely ignore the stocks near the top of the list. Under computer and technology, though, what I did is I didn't like a lot in the hold section, but I went into the buy section. Some of these have had buy signals for a little while, or have pulled back or showing corrective moves. Blink is one we've looked at a number of times. Actually, it went back to hold today, which is actually good. because you could wait for it to go back to buy. What I'd want to see is does this sideways pattern hold? I wouldn't want it to dip too much lower than what it did today. And like I said, you could wait for it to go back to a buy signal. Now, it could actually dip a little bit lower. If this is an inverse head and shoulders pattern, very often the left and right shoulders will end in the same spot, which would be down in this area here. There's a little bit more support in this area here. So it could be that this is just going to correct back down to that stronger area of support to move up off of it. But overall, it still looks like it has that inverse head and shoulders pattern developing there. Definitely would wait for it to go back to a buy signal though to get a little bit of additional confirmation. And then I also liked 3D Systems. DDD is a ticker symbol. And again, this still could, it's kind of moving sideways and it's down a little bit today. It could pull back a little bit further. It could pull back to that previous breakout area and still have a higher low right there and still have support. But I still like the upside potential here. I think this is working its way back up to that previous high. And so, like I said, today's candle is down and looking a little bit bearish. It could pull back a little bit further. So I don't know that I'd be jumping into this today. Either if it pulls back a little bit further, because we're not dealing with signals now, because it's already a buy signal, you could see if it pulls back to that previous breakout area of support, see if that holds the support. And if it starts to move back up, you could look to enter, or you could, if it does reverse in the next few days and breaks out of this little sideways range, that could be a potential entry point. I think this still has some upside to it. And then under industrial products, under the buy category here, plug power is one I keep pointing out. It's another one that is down a little bit today, but I still like the fact it still looks like it's reversing. Now this is going to be a key low right here. If it breaks below that, you've had kind of this slightly higher high. This gave you a higher low right here. If we break down below that, that kind of changes. You don't have that bowl-shaped move anymore. It's not acting like an uptrend anymore. And so I would probably stay away from it for a little while. Come back to it again if it started acting like an uptrend again. But that'd be a key spot right there to keep an eye on. And then we went over on industrial products on Tuesday. We pointed out Alcoa here. It's a 90 strength rank, so it's getting down there a little bit. But I had mentioned this one because hold on here. You had this nice strong uptrend right here. This looked like wave A, wave B, wave C. And since then, it's been kind of moving up pretty nicely. It's probably getting pretty close to going to a buy signal. Yeah, we're at the halfway point of the hold range, but you can wait for that to go back to a buy signal as confirmation. So that's a few stocks that we could consider. But that's why I was a little bit concerned with the market conditions. I mean, you look at just the indexes and they look pretty strong and pretty good, but I've been looking at a lot of charts, going through a lot of those scans and lists, and haven't found a lot of patterns that I really like. And so, yeah, that's not to say there haven't been strong uptrends. It's just, I don't want to. There's a difference between a strong uptrend and a good entry point within that strong uptrend. I can have a stock that has been moving up and is really taken off, and it's right up in here. That's a strong uptrend, but it also, I want to be able to have a good reward to risk. I don't want to be getting in right when it pulls back within that trend, and I have to wait for it to pull back, wait for it to come back again, or stop out of it. So either a lot of stocks are extended like this, or they're pulling back and they don't look like they're reversing that pullback just yet. And so it's kind of like you're caught between. Now, these types of conditions can test your patience, because really what you should be doing is just waiting until everything looks better or stronger. I say this all the time, but when you know, you'll know when you want to be aggressive when you have so many trading opportunities you don't know what to trade. There's so many great patterns out there to trade, that your tough choice is deciding which ones to get into. When you're going and doing analysis, and if I'm spending 2 hours looking for stocks and I come up with a list of 2 or 3 stocks, that's usually a pretty good signal that I don't want to be doing a lot of trading at that point. Because we talk about breadth, how many stocks are participating? If there's only 2 or 3 stocks that I find out of 200 or something that look like they're worth getting into, that's probably a signal that you don't want to be getting into too many trades. The conditions just aren't great at that point. All right. Let's get to the trading for today. Now, I mentioned this on Tuesday that I was going to take a little bit of a break of candle patterns to kind of address a couple things. We talked about trading ETFs on Tuesday. Next week, I'm going to get back into some candle patterns. We'll look at continuation candlestick patterns that we can learn about. But what I want to focus on today is indexes. And how to kind of look at the stocks or individual stocks that are within some of these indexes. The most basic one would be the Dow. You only have 30 stocks in there. That's an easy one to go through. And because there's only 30 stocks in the Dow, I will go through that list of Dow stocks, not quite every day, but it doesn't take me very long to go through the list of 30 stocks. I can do it in about less than 5 minutes. If I know what I'm looking for, the pattern I'm looking for, then I don't have to look at the chart for very long to see if it's there. But obviously the S&P 500, you're not gonna want to go through all 500 stocks every day, and you don't need to. But how do we, if we do want to trade those larger companies, a lot of times in these stock specific classes, we find these smaller companies that maybe not too many people have heard of. Half the time, I don't know what these companies do, and I don't really care. I'm just trading the chart and just kind of following what the big institutional traders are doing. They like them for some reason, so I'm going to follow what they're doing. But I can understand, and I myself at times want to trade some stocks that I kind of know that they're big. They're not going to go out of business. Sometimes when when you get into a market where the risk isn't there, it's kind of the risk-off environment. Money will come out of these small cap stocks that have the high growth, and they'll go into solid companies that are going to be around forever, and you don't have to worry about them disappearing overnight, which you do have to worry about on some of these stocks. Like I mentioned with like the electric vehicle companies, there's a ton of them right now, but they're starting to drop like flies. There's a lot of them that are going to go out of business in the next year, and only the strongest are going to end up surviving. Why don't I take that risk with my entire portfolio? I want to make sure I've got some stocks that are going to be around. How can I do that kind of analysis to where I find, if I do want to own some Dow stocks, how do I find the stronger Dow stocks to own, or that might be in a good entry point? Well, there's a couple ways you can go about it. One is you can go into your indexes tab up here, And this should be part of your analysis anyway from time to time. I don't do it I usually do it about once a week, where I'll check the ratios right here. I've talked about this a number of times. When you start to see double-digit ratios of buys to sells, or vice versa, sells to buy. If it's double-digit buy to sell, actually it wouldn't be double digits on the sell side. It would go to go really small, and it would go below 0 or below 1. But when you start to see the double-digit buys to sells, it could be an indication that it's getting overbought. But you can also pull up the entire list of these companies and go through those. These are going to be ranked by strength rank. So the easiest one, let's do the Dow right here. If you pull up the Dow, you can see that it's ranked all the Dow stocks. Here's your 30 Dow stocks. And the highest strength rank is Goldman Sachs at 76, Nike at 71, and it kind of goes down the list there. So you could say, well, which stocks have the highest strength rank within the Dow? You could start to take a look at these ones at the top of the list. Now we can scan through the entire list, scroll through the entire list. And the way you could do that is by clicking, let's click on Goldman Sachs at the top of the list there. It'll pull up the chart of Goldman Sachs. And actually that chart's not too bad. It's down a little bit today. But see, this is what I was talking about. The Dow is up. I think it's still up. Sometimes it'll change because it's when I'm doing these updates, sometimes the market will move, and then but I'm pretty sure the Dow is up today, and yet Goldman Sachs is down a little bit right here. And this is one of the leaderships. Yeah, Dow's up 100 points, and this is one of the leadership stocks within the Dow, and it's down a little bit. So that's what I'm talking about with the breadth kind of situation. But overall, you got higher high, higher low. Looks like it's pulled back right here. It's coming off of that. The uptrend still looks pretty good there. So if you're trying to decide which large cap Dow stocks you want to trade, you can do it this way and go through the list. Now, a lot of these, as you'll notice, aren't going to have very high strength ranks. You tend to get those higher strength ranks on some of those smaller companies. Now, how can I scroll down through the list? If you change this list right here to muscle stocks, or muscle scans, and then this drop-down menu right here, if you go down to the bottom, click on the drop-down, then go down to the bottom of the list, you'll see there's your indexes, S&P 500, Dow, NASDAQ 100. Let's click on Dow, and that's going to load all those 30 Dow stocks, so I can just scroll through them. So because it's ranked, it's going by highest strength rank. I can see if any of these stocks, Dow stocks that have the higher strength rank, have good charts as well, good trends as well. Goldman Sachs isn't too bad here. Nike they had an earnings report and it gapped way up, but I don't like to chase big gaps like that. Sometimes those gaps will get filled or partially filled. And it's all the way to the right side of the extreme range there. So although it's up there as far as strength rank, I don't want to chase that chart. American Express, you can go through the list here. Caterpillar looks like it's been beaten up a little bit. I'd like to see a little bit more. You got a impulsive down right here, and then you've got a little bit of back and forth, choppy back up. This might still be in a downtrend. Now maybe not. Maybe it moves up and then pulls back and moves up, and you get these higher highs, higher lows, starts acting like an uptrend again. But Caterpillar is kind of in no man's land right now. I wouldn't run I don't see a clear trend direction on that one yet. JP Morgan. So anyway, you can go through and look to see which individual Dow stocks look good. Now, Disney looks interesting because you had this stair step down right through here. And then here you had impulsive down, impulsive up, and then this looks like an ABC. It looks like it's a little bit more choppy, more corrective. I would say that if Disney can break out above here and give you a higher low and a higher high, this thing could be in an uptrend at that point. So that could be interesting. It's still, you have a little bit of a near-term possible higher low right there. Last couple of days it's moved higher. Nice little reversal candles right there. We had that downward candle right here. This one is upward right there. We'll see if that starts to move higher there. Anyway, you can go through, and I do this all the time. I go through the whole Dow list. This is Dow Chemical, so don't get that mixed up with the Dow index there. But this is impulsive down. This is like wave A, wave B, wave C. Notice how it's more choppy and sideways. I would assume this has a little bit more downside still. You can also go through the NASDAQ 100 is not too hard to go through. If you don't have to look at the chart very long to kind of recognize the pattern, it doesn't take very long to go through 100 stocks. And I don't do this. I don't go through these indexes every day, but I try to go through them every now and then. I'll even go through the whole S&P 500 because sometimes there can be stocks that are just starting to take off, and you're missing them because they're not showing up in some of the scans, and they could be very early in their trend reversals. They're acting like an uptrend, but just barely start to act like an uptrend, and so these stocks typically don't. It takes a while to kind of establish that new uptrend, and so it's not like it's something that changes day to day. But every couple of weeks or so, I'll go through the S&P 500 list and look at all the stocks in there, and sometimes I'll find stocks that are kind of not on the radar yet, that either I can get into or I can put it in a watch list and keep an eye on it. To maybe I wait for it to show a little bit more strength before I get in. And again, I'm not saying that that's something you do all the time, and definitely not something you're going to want to focus on if you don't have a lot of time. So many of you're using the software because you don't want to be looking at 500 stocks, and I get that. You have other occupations and things that you focus on. I'm just saying that this is all I do is trade, so I'll go through that. And if you're in the same situation, I'm just saying you might want to do that from time to time. And this is a way that you can do it pretty efficiently, is to pull up the NASDAQ 100 there and go just scroll through these and look at the different stocks within that list. And you might find some of these might have lower strength ranks, so they may not show up on some of the scans, but they still could be stocks that you could trade or look to get into. Now, one thing that I've done, this takes a little bit more time, but I talked about this when I was doing the training on watch list, is, there are some stocks, particularly in the S&P 500, that I just don't have no interest in trading. They might be a utility company or something that the only thing, it basically moves sideways all the time, and the only reason why people own it is for the dividend or something like that. There are just a few stocks out there that I just don't really feel like trading, and so I created a watch list where I kind of my own S&P 500 watch list, where I don't have every stock in the S&P 500 in there, but just the ones that I would kind of want to focus on. So that way I'm not looking at 500 stocks. It's going to be less than that. But again, I can do that. I can scroll through that when I set up that watch list. I can just select my watch list right here, and then I can go through whatever watch list I've set up. Now you could do that with the Dow. Maybe there's a couple stocks you find that you never really have interest in trading in the Dow or even the NASDAQ 100. And now this takes more time because you'd have to set up the watch list. But once you have that set up, you could scroll through that. For those of you that don't want to take the time to do that, well, then you've got, this is, the alternative way is to just go in here and select the muscle scans and then go down to the bottom of the list there and then just go through those full lists there. Okay. Now, another thing that you can do is if you go into the index tab again, and we move this back over into the index scans right here. Is, you can see, let's say you want to take a look at all the NASDAQ 100 stocks that have buy signals. You can click right on that 44. It says 44 of those NASDAQ 100 stocks have buy signals right now, and it'll show you what those stocks are. And it's going to rank them by strength rank. So you can say, well, these stocks have buy signals, and they're at the top of the list. And then you can go look at the individual charts of those stocks and see if, again, the strength ranks are going to be a little bit lower than, you're not going to get a lot of 98 strength ranks. But again, the whole point of this is for those of you that want more established companies, larger cap or mid cap type stocks. How do you find some of those? If that's kind of what your focus is going to be, then this is how you can do that. This is how you can use the software to go ahead and do that. Okay. All right. That's it as far as that's concerned. And the biggest thing is get in there and just kind of play around with these things. Click on these different boxes and kind of see what's in them. And see how that could apply to what your objectives are and trading strategies and things like that. Because there's a lot of tools in here that you can utilize for whatever type of trader you are. And that's really why it's designed that way, so that it can save you time. It can kind of put you in front of the stocks that you want to be put in front of. All right, thanks everyone. Have a great week. Have a great 4th of July weekend. Remember, the market's closed on Monday, and we'll see you on Tuesday for the next market update. Bye now.